In the 90s, you had a China strategy. In the 2000s, it was the internet strategy. Now it's the AI strategy. I think investors are really more looking for which large cap blue chip stocks are going to adopt AI and grow their business and become more efficient, as opposed to buying a multitude of companies with the name AI in them, because the tools eventually become commoditized, low margin, easily available tools. And as the tools get better, just like internet picks and shovel manufacturers, for example, the tools got better, but eventually you don't really need better tools to do the basic applications that you're providing to your customers. Not everybody needs a tool to design the next rocket or the next brain surgery procedure or the next hot drug. Sometimes the artificial intelligence is just to help a computer generate a quick written response to a client query, or put you to the next phone bank, or answer a quick email you sent to a company. That's not super high-end stuff that you need to spend tens or hundreds of millions of dollars on Blackwell chip from NVIDIA. And I think that's what's happening. And that's why the equal weight S&P 500 index fund is relatively doing better than the market cap weighted index fund. So this is a process that I think is happening quicker than it happened with the internet, much quicker.